Okay, so I wanted to talk to you about DOP and key turns, and this is really important that you understand this. And I have the time and date website up because I wanted to show you this is real time. This is not after the fact information. So I just refreshed the screen. I'm in Mountain Time Zone. It's 3:42 on Sunday right here. And you can see my timestamp down here, 3:42. And if we go to charts, I'm going to first show you DOP on the day chart. Remember, DOP can only be used on a day chart, and then the key turns can be used on any chart. And for both, you want to make sure that you load 365 days. This is important so that you have consistency. It uses every single day for the data, and it was developed using that amount of days. So just make sure you have that in your data series. Just click on that and make sure it's 365. So day chart, 365, and you're good to go. So what I want to show you is this. This is kind of like the weakness videos that you've probably watched by now, those of you that have this indicator. But I wanted to show you kind of a contrast. You see, so for example, and you know, every couple days are different. So in some ways it's unfair to compare 2 days, but I want to show you the difference of this so that you understand one of the ways to use the DOP indicator. And by the way, I will mention, if DOP is just confusing, you really don't need to use it because the bottom line is the key turns price is the most important. I didn't have that years ago. 15 years ago, I wish I would have been able to figure that out. That didn't come until just a few years ago that I figured out how to populate the key turns price. And it became life-changing because of what we're able to do with it. So essentially, it provided additional strategies for what we were already doing with this indicator. Okay, so I want you to look at this in comparison to this. So this white dash here, this is where DOP opens, in other words, the value when the new day's candle, and it stays there. This white dash does not move. Now, the bar, green and red, they will move based upon market movement because if, you can see, for example, this day on the 9th, it opened here, and then you can see, which means that, since this was lower than where this was at, we can see that price fluctuated in relation to that where it had started. So the significance of this is this. If you look at this one on the 10th, Friday, compared to this one on the 3rd, so you see where this one is, and then you see where this ended. And now you see where this one is, and you see where this ended. Now I want to caution you, if you're going to try to figure out, values over here and the relation, you might find something, but honestly, I think you're going to be kind of distracted because I don't think that's important. Really, this just comes down to visual. Okay, do you see how the difference between this one and this one is stronger in the sense of the downward direction than this one and this one? So the reason why I want to show you these two, and we could look at tons of them, is because the only way that this is going to go further down tomorrow, January 13th, so today's Sunday the 12th, we've got about 15 minutes or so until Globex opens. The only way it's going to continue head down is if we have greater strength than this. This is really weak. So depending on where this opens, and what I'll try to do is I'll try to have a recording so we can see this live. And so the next video, you'll see this live, you'll see it open live, and then what I'll do is explain to you what's happening. And then I'll walk you through my strategy for Globex and into the next day. Exactly what I will do. Okay, so in recap, in case I lost some of you, because some of this really is confusing, the difference between an example like Friday and an example like the 3rd is, do you see how there's more space between where the vertical bar ended, I'll move my cursor, and then where this opened, compared to Friday where this opened and where it ended. Okay, that shows weakness. Okay, there was strength and we continued down the next day. Okay, so what I watch for is, are we going to have strength or weakness? And that will be determined by where the key turns price opens, which essentially this is it. This dashed line here, this is key turns. There's a conversion process because this is a whole different scale. So if we go to the key turns price, which again hasn't populated, it's going to populate in just under 15 minutes. Friday was beautiful. And so depending on where this is going to open, we're going to be, this will shift a little bit because at 1600 hours, just the next candle over, we're going to have a new key turns price. And then what I'll do is I'll explain exactly what that means. I'll show you if it's strong and I'll explain why, or if it's weak and I'll explain why. And then I'll help you understand my strategy for Globex and then going into Monday. And you can totally use this all through the night. You can just use it during the day session. It doesn't really matter. The markets are fluid, and that means that they constantly move, and there's always opportunities to get in on. So that's it for this video. So watch the next one, and you'll be able to see this actually populate live in real time, and then I'll walk you through what's happening. Okay, so we are seconds away from Monday's Globex open Sunday, 4 o'clock Mountain Time, 5 o'clock Central US. So what we want to watch for, and this is not something you have to be there real time for. I just wanted to show you this so that you can hear my commentary in real time. And again, here is the date and time, 59, Denver. Okay, so any second now we're going to have the new candle. And then what's going to happen is we're going to have the new key turns price. So I want you to see this in real time so that you can hear my real-time commentary and it's not, after the fact. Okay, so boom, there it is. Okay, so what this means, now remember a little bit ago, I had mentioned that what's going to happen is we're going to have additional strength in order for this to continue down. Now, do you see where this on the left? So this is the day chart. This is I actually have a 15-minute chart. I do a 15-minute not because I trade from it, because I like to see a larger time frame when I look at key turns. So do you see how this it's right here, the white tick mark? I don't have a name for it, just that white mark there, and you see where this vertical bar was. So what that means is that this is super weak. So what we do is we can test this. I typically use the red line, 76. If you watch previous videos, you'll understand the difference between the two. It's just a tipping point. We obviously have to advance from one tick or the other side to tip from one direction to the other. So you can absolutely test this. You can short that and then see if there's strength. So the bottom line is this: we want to look for selling opportunities below the key turns price, and we want to look for buying opportunities above it. Now, because of where this is at, it's not like this. You see that what I had talked about in the previous video? Because it's not like that, it's not as strong. We're still down, okay? So at this point, we're still looking for short positions. It might not get here. It might blow right past it. So what I do is I look at my other tools. Okay, what do I have that I can use to get short? Do I have, like a prediction point? Do I have, anything, any other tool that I'm using? Do I have anything that I can test to short the market? Why? Well, because we're below key turns. And I know that when price is below key turns, then the dominant push is going to be down, okay? Now, I also know that we can go up to it to test it, okay? So I'm not ignorant and not going to buy, but I'm heavier on the bias towards selling, in other words, okay? So if it gets anywhere near here, I'm going to sell, and if it breaks through it, I'll simply get out and look to get long. And really, that's the bottom line. The biggest thing is I wanted you to see this in real time when the new day opened. So here we are on the new day. So do you see this is actually a perfect example. Do you see how the bar is red on the DOP chart? Now, we are net positive and the bar is red. And the reason why is because we are below key turns. Now, if price comes up here, in fact, as soon as it hits 625, it'll actually turn green. And if it stays up here, it'll stay green. As long as it stays down here, it's going to be red. So it's just, the reason why it does that is so that you have the instant visual. You instantly know what that means, okay? So that's really it. I don't honestly do anything more than that. I just look at where that's at, I look at the strength, and then I make my decision. And I'll say one more thing about this. So when you, as a trader, you must have tools that give you some sort of edge. And it's not a blanket statement. It has to be something that's tangible, that's real, that you can see, that has produced results over and over and over again. Now, the important thing about that is that once you have defined that edge, you absolutely must be disciplined to executing that strategy. And I've been fortunate enough to have learned from a few different fund managers over the years, and it's really enabled me, and as some of you know, to not just move into that position, but to acquire the type of discipline that it takes to use these things and actually realize substantial returns. So once you have defined that edge and you understand the strategy behind it, it is imperative that you follow through with that. And the reason why is because if you don't, then it's completely pointless to use it. Let's say, in fact, one of the fund managers that I am associated with, he does something completely different, nothing even related remotely to the way that I prefer to trade. His style of trading, and you have to realize he has a $1 billion fund. He literally wins 40% or less of his trades, which to me is mind-boggling. But what he does is he takes very small losses when they happen, which they obviously happen 60% of the time. But his 40% winning trades are massive. And we're talking, I don't know, hundreds of points. We're not even dozens of points, but substantial amounts of movement. He's much longer term. Again, he does a completely different style of trading. But my point is it's not about the percentage. It's about following through with your strategy no matter what. So once you have an edge, you have a tool that gives you an edge, and hopefully by now you understand the power of DOP and key turns and how it gives you an edge. And then once you understand the strategy or strategies behind it, it's imperative that you execute those no matter what you're thinking, no matter anything. Because if you don't, then you may as well not even use it. Okay, so that's probably really what trading boils down to is the execution part of things. And you can't hesitate. You just have to do it. You just have to click the button and get in the trades. You define what your edge is. You understand what your strategy is, and then you execute every single time it happens, no matter what. And that's how you make money, and that's how you become consistent, and that's how you build accounts. So I'm going to wrap this video up now, and then what we'll do is we'll come back, and I may come back in the morning. Haven't decided yet, but at very least we'll review the day. I've given you my outlay. So in recap, exactly what I will be doing is I'm looking for shorts right now. Anything that I've got, I'm looking to short the market. Okay. Now, if we were to look at a minute chart, this looks a bit different. And we do have about a 5-point range, so that's actually not too bad. But we won't get into that. I'm looking for shorts all the way through here. I will test that, the 76. And if it gets there, I'm going to short it. If depending on how strong it is, if it breaks through and gets to the opposite side, I'm going to get out of that short and I'm going to get long. If it comes right back, I'll get out of that long and get short. Very, very, very tiny risk there. We're talking ticks, not multiple points. Okay, so that's one thing that I'll do. So if we do stay above, then I'm buying. I'm absolutely buying because I already know it's weak. It's not strong to begin with. So I have that on my side. So I essentially have two edges here. I have DOP. This is telling me that the downside is weak. We're not very far away from our turning price, but we're still below it. So I know that this is my other edge, the key turns price, that anytime price is below it, especially this close to it, it is ideal to be short and to look for short positions. Once it breaks above, get out of those shorts and look for long positions, period. And that's really the bottom line. Okay, so that's enough for this video, and then so be sure to watch the next one where I'll tie all this in, wrap it up, and we'll go over what the market actually did. Okay, so here we are. Actually, let me pull up the timestamp page. So just refresh this real quick. I like to do this so that you can see this is I'm doing this right now. It's not a voiceover and recording a perfect deal. So Monday, 3:44 p.m. my time. So Globex for Tuesday opens in 16 minutes. So I wanted to show you this after the close because I wanted to show you before the next key turns happen. So that's why I want to hurry and do this. And so everything followed suit exactly as planned. We can buy into the price, which it gave us plenty of opportunities. In fact, let me pull this up. This is the box. So if we look at that time frame, so we had so 1600, which is 4 o'clock. So we instantly had a buy. So we could be buying into this. Where do we get out? We should probably think about getting out at the key turns price. Was it perfect to the tick? No, but sometimes it will be, and sometimes it won't be. That's really besides the point. The point is we can take whatever profit you take there. Ideally, you're in that until this area, and then we can test that. So we had a sell that was 4 points later. So you had a 4-point head start on this drop here, which was by this time this is a 612 tick chart on the ES. So this was market open. So we can short the open, and we know that we're below that, so we can try that. But look, here's what we have to always look at. So this is, what time is that? 7:45, and then yeah, same. Well, this is the 15-minute chart. That's why the pricing is, or the time of the low is different. 7:42, and then this is the 7:45 candle on a 15-minute chart. So the low of the day. But let me show you this. Okay, so this is good. So we have this low. We have these lows here. So anytime that we're selling, or we're short, our positions are short. And the reverse of what I'm going to say applies to long positions. It's very simple. Just one of the things that I've seen over all these years is traders just complicate things, and a lot of times, I won't get too deep into that. But look, if you just identify lows, here's a low, here's a low, here's a low. In order for this thing to keep dropping, we have to break these lows. When we broke this low, that's a good sign for this to continue, but we weren't done yet. Okay, we broke through here, but if we looked back to that 612 tick chart, we weren't done yet. We kept climbing higher. So if we bring that back up, we can see that this low, higher than this low, we're not making lower lows. We did through this downspout here, and we had the key turns to confirm that. Absolutely perfect. But we're not making lower lows. So remember, in the first part of this series, I said, yes, it's down, but it's very weak. Okay, so it still means we look for shorts. We look for shorts. Okay, we can trade shorts. It doesn't mean you can't go long. There's plenty of opportunities to go long, right? But we know that the down, in other words, let me say it this way, the call, quote unquote, is down. Okay, so the call for the day is down so far until we breach this level and hold above it. We attempted to through this period. We had more succession to the downside, but remember, we know it's weak. Try it again. Okay, now we have strength. We have to continue past these lows to continue down. If we don't, we're going up. What do we do when, so we can test this, of course. What do we do when it's above? We buy. We start buying. And so the flip side of all of that I just said is what we do on the opposite side. This thing runs for about 14 points from the line, and the rest is history. So this should be like, even if you're trading like 5 contracts, this should be a $10,000 day. There's no reason why you can't do that. If we break this down, obviously more if you're trading more money. We have buying. We have buying at 9 o'clock. Where were we at 9 o'clock on this guy? We were here. We were above price. So how perfect is that? And we had talked about this before the market even developed. We know exactly what we're going to do. So we have this nice buy. And it was kind of slow today, which sucks. And it sucks because you just have to wait. You have to wait to get your money instead of get it real quick, right? It's kind of funny how that works. So then we have this little dip, and obviously you can trade that. And we didn't have a new box form at all. This one formed at my time, 10:35-ish, and that was the last one of the day. It's just slow, not a lot of volume, but you can take money from that. You can take money from this. This would actually have been a loser. So if you were trading the box, you would have actually lost this. Not very much, a tiny amount. And then, you get all that times 5 or 6 all the way back. Okay, the last thing I want to show you is, okay, right here. So I wanted to show you this. Check this out. So this box that happened the day before, Friday, right? So this one happened Friday. Look where the 5th profit level's at. So it's at 76.25. What's at 76? Our key turns is at 76. If you're long, get the heck out of that thing and go short. You can get all of this. You can get this. In fact, you technically could have gotten most of this. What do we have right here? We have a profit level. Take profit, right? So you're in at very least 76, and then you're not going to get every tick, but we go to 68. So that's 8 points of play that you have. You can get 4, 5, 6 of that, no problem. So that is how powerful these tools are, and that's why I continue to use them day in and day out. But this DOP and the key turns price, hopefully you can see why this governs all of my trading. There is so much we can do in here. We can get so much of this. So here's that first. So here's the first candle. So much. We can go long. We know that we want to look for shorts. Okay? We already know that. We know that it can come up here. If it breaks, we need strength. Strength is breakouts. Here's a breakout, tiny, tiny, tiny. No breakout. There's no breakouts. Okay, we're going back down. I know a lot of you are obsessed with stop losses, and I would encourage you not to be. Just look at the price. Look at where we are at. If we're above it, you really need to seriously consider getting long. If we're below it, seriously consider getting short. If you're unsure, stay out. Just watch it. There's a lot of value in actually watching the market develop when you have something, what I talked about before. Number one, you have to use something that gives you an edge. You have to understand what that edge is, and then you have to understand the details of the strategy so that you can implement it in the real market with real money. Okay? And then we just do the same thing every single day. And so this tool, this is my staple. This is what I make all my decisions from. If I'm going to be buying into something, if I'm looking for shorts, no matter what else I use, this tells me what to do. This is my, crystal ball, so to speak, but it's not. I hate to use that term, but hopefully you can see why that is the case. So anyways, that's a wrap. I hope you enjoyed this series. What I did in the first part of this, I do this every single day, and you can do this on every single market. So no matter what you trade, this is exactly how I do it. That's how I set up my day, and it's the entire process I go through. So anyways, that's a wrap. If you use NinjaTrader, I'd highly suggest getting this tool while it's available. we're counting down the days to where I'm wrapping all this up, and I think you'll really enjoy using this for a long time. Okay, so this is another, I just want to do this, take 2 minutes and just show you this. So first of all, here we are, Mountain Time, it's 7:30 p.m. So the Globex for Tuesday has been open for 3 hours and 13 minutes. And I just wanted to show you key turns for Tuesday, the 14th of January. 3287.5, we went down to the tick. So we do the same thing because of where it opened. You see it's just really close, and unfortunately you can't see how this bar developed because that the vertical green and red bars, those move. The white tick mark, that's where it opened. Again, this gets confusing for people. The biggest thing is just this: we're buying above, we're selling below. It went to the tick, so we can test it, and it's ran up to 96.75. So we're 9.25 points already from that price. So I wanted to show you this because this gives you a glimpse into the incredible things you can do with this. Sometimes I get emails, people, how do you do this? This is absolutely amazing. You know, I appreciate the compliments, but honestly, it's not me. Every single one of you can do the same thing that I do. And it just takes a little bit of time to understand it. And once you understand it, you will look like a freaking genius. You'll be pulling out 5, 10, 20, 50 points in a day. And this is it. You can really use almost any tool that you want to use. As long as that tool is effective, I think we've established already enough. You've got to use something that gives you an edge, number one, and then you have to understand the strategies behind it, either strategy or strategies. And then once you have that, use this tool, the key turns price, in with that, and my goodness, 2020 could be your biggest year of your entire life. So anyways, I think I've said everything I could possibly say about it. It's not rocket science. Prices above it we buy, prices below it we sell. We do have periods like this where it's just back and forth. This is a battleground between buyers and sellers, but we know to be long above and short below. Can we take small profits here? Sure, but we can also cut losses, and that's the key. Okay, we already talked about this, so I won't dwell on that, but I wanted to show you this because here it is, real time. This is what happens. I've been gone all night, so I came back and I saw this and I thought this is just a perfect thing to show you because it wraps up everything that we've talked about throughout this short series here. It's absolutely perfect. So what we do is we still are looking for buys. It doesn't mean that we can't sell. We can't get into short positions, but we know that as long as we're above here, the bias is up. And if we fall below here, we're going to look for shorts. We're going to sell it. So anyways, that's a wrap. So enjoy it, use it. Again, you can use this on any market, even stocks, bonds, Forex. It doesn't matter what it is. It's a very powerful tool. In fact, by the way, you can even use this on Bitcoin, and Bitcoin, it works extremely well. I mean, it works well in everything, but those of you that trade Bitcoin, oh my gosh, it's absolutely worth just using. Where it's priced is, honestly, it's kind of a joke. I really should package this into a $10,000 plus package, but you know what? You guys that are using it are killing it, and you're making insane returns every day, and it's just a matter of following through and implementing those strategies that just work over and over and over again. So anyways, that's a wrap.